So today's topic is on cryptocurrencies as an investment vehicle. I tried to post this post in terms of the words on Facebook, and for whatever reason, the Facebook algorithm it picks out certain words in the post and it takes it like you are one of the cryptocurrency scammers. Yes, this space has a lot of scammers. They will promise you ridiculous returns and they'll tell you invest this much, we are into mining or we are into crypto trading, and within a short period of time you make this much money. And they'll even have websites, but you know how it is with creating a website. It's something you can even do in less than 5 minutes. So they can create a website, get people to join, people to put in money, and then they'll shut down that website and run away with people's money. So I think that's the reason why Facebook has put in these issues to say once it picks up that the topic is on cryptocurrencies, it will take it as if it's a topic relating to one of the scammers. So with that out of the way, what are cryptocurrencies? So cryptocurrencies are simply digital currencies, meaning they've got no physical form. If you get money, your cash, you can touch it, but a cryptocurrency, you cannot touch it because it's a digital currency. It has no physical form. It's electronic. Cryptocurrencies, they get their name from the fact that there's a lot of encryption that takes place in the creation as well as how these are transferred and stored. So that encryption, which enhances the security of the cryptocurrencies, is where they get the term crypto from, and that becomes the name crypto. So cryptocurrencies are not controlled by any government and they are not created by governments. Yeah, though governments can also create, obviously, if they want for certain services, but these are decentralized systems. They are not controlled by one individual or by a government. These are currencies that are traded peer to peer. So one individual can send or receive money to another individual without involving a third party. Third parties such as banks. And if you think about it nowadays, when it comes to money, the way we trade or the way we deal with, say, mobile money, you'll be able to send money from your bank account to Airtel money, and no physical cash is actually held in your hands. So they are pretty much using the same principle of cryptocurrencies, where there is no physical cash moving. I know at the end of the day, the banks will settle the differences in terms of the money that has moved, but they rarely actually move the actual cash. It's not like if you transfer money from Zanaco to Stanbic, then Stanbic will get a bucket load of that cash and take it to Zanaco for you the following day. No, that's not how it works. They're just going to settle at the end of the day. What is the net position? And that net position is the money that they'll send to the other bank. Cryptocurrencies, what kind of technology does it use? Cryptocurrency uses a technology called blockchain. So blockchain technology is simply a code that is created on, say, one computer, but this code, once it's created, it creates blocks, and these blocks contain the information relating to that particular transaction, and all the computers on that particular network are able to verify and counter check the information that has come in from this transaction, such that all the computers that are connected to this transaction can verify and check this transaction. Therefore, there is a lot of security when it comes to this system. And once a block is created, once this transaction is created, it cannot be changed. No one can manipulate it or change it subsequently. So this reduces the issue of duplications, fake transactions, as well as just delays in the process or losing that information, because there is always going to be a record kept somewhere of that transaction. When it comes to cryptocurrencies, the first cryptocurrency that was made was called Bitcoin by a guy called Satoshi. Nobody really knows who this Satoshi is. It could be, they say it's a pseudonym and whatnot, but yeah, nobody really knows this person. But this Bitcoin was the first cryptocurrency that was created. So whenever people talk about cryptocurrency, that's why the first thing that comes to mind is Bitcoin. But there are a lot of different other cryptocurrencies, such as Ethereum, which is used for smart contracts. You have Litecoin, you have Ripple. Ripple is mainly used for transferring international transfers, but at a very cheap cost, and those transfers or payments are almost instant, because usually when you are doing international transfers they take a bit of time and they're quite costly. But Ripple comes in to try and solve that situation. And you also have alternative coins that are not based off of bitcoins, and those ones are called altcoins. So how are cryptocurrencies created? So cryptocurrencies are created through a process called mining. Mining is simply just using your computer power to solve complex mathematical problems. Once your computer solves that complex mathematical problem, then you're going to earn these coins. There is a process that verifies that your machine has actually performed this work, called proof of work. And once you mine and you earn the coins, and those coins then will be added onto the system as part of the now created bitcoins or cryptocurrencies. For Bitcoin, there is ever only going to be 21 million of them, and so far 19 million have been mined. So that means there's only about 3 million that is remaining that can be mined in terms of Bitcoin. So this has made mining a bit expensive in relating to the power that you need in terms of the machine, as well as the time that you need to mine, because these machines, they usually use a lot of electricity. So if you are not on a solar grid, for example, then you're going to have a lot of costs in terms of the electricity just to mine. So that's why currently mining is a bit expensive, and therefore the easier way for you to have bitcoins at the moment is just to buy the bitcoins from someone that already has them. So how are cryptocurrencies stored? Yeah, so if you own cryptocurrencies, as I mentioned, it's something that is digital, it's not physical, meaning you can transfer the value from one person to another, but you don't physically own something. So the way you store bitcoins is through things called wallets. So the wallet can be on an exchange, it can be on a forex broker, or it can even be on a flash drive. So there is the hot wallet, which are the online types, and the cold wallets, which are offline, which can be a flash drive and whatnot. So for the currencies that you own, you are going to have a key, and that key is it's what saves the transactions that you have, or the money or the cryptocurrency that you own. So you should never lose that key. There are people that have lost these keys and they have lost their money forever. Yeah, no, there are some of these sites can keep like a backup of a key or a way that you can recover that key. But once you lose the key to the cryptocurrency, then that's it. That cryptocurrency is gone. No one can ever get it. So how can you buy and sell cryptocurrencies? So most governments right now, even now, though there's been some acceptance in certain countries and whatnot, but most governments are still not very comfortable with cryptocurrencies. This is because cryptocurrencies are taken to be, I know there's transparency, but they are taken to be, people can carry out these cryptocurrency transactions without proper KYCs, meaning you might not know necessarily the person behind the transaction, and therefore it breeds the ground for money laundering, terrorist financing, and all these things. So that's why many governments are frowning on this technology. So how can you still buy cryptocurrencies? So there are certain sites that can allow you to buy cryptocurrencies, and in Zambia we even have apps such as Yellow Card. Yeah, with Yellow Card you can even use your mobile money and whatnot to buy cryptocurrencies, and there are other sites that you can use to buy cryptocurrencies. It's much easier now to buy cryptocurrencies than it was back then. But even now, there are certain banks that do not allow transactions relating to cryptocurrencies. But there is more acceptance because even the government came out some time back and talked about cryptocurrencies, that they they are still regulating it in a certain way, but they are also allowing the space to grow. And once it grows, then and technology grows, then the government might also use the technology, because as I mentioned, this technology uses blockchain, and blockchains have got a wide range of applications. That's why you've seen that even certain football clubs like Inter Milan, Juventus, they even have their own coins, because they have certain use cases. You can buy pretty much anything with cryptocurrencies in some of these countries, and you can therefore easily transfer money between countries, and it therefore creates an environment that is more inclusive. You know, we keep talking about financial inclusion and all those things. Therefore, this space is also a means that can help people to be financially included. So what strategies can a person use to make money in these cryptocurrencies? So as I mentioned, the regulations relating to cryptocurrencies are not very up to date, and the regulator is still trying to understand cryptocurrencies. But this space, the problem that has been there has been a lot of scammers. I'm sure anyone that's on Facebook, for example, has gotten an email or a text or something, or a WhatsApp message from someone claiming to trade Bitcoin, someone claiming to mine Bitcoin, or someone who has an investment platform where you can invest in Bitcoin and make money. So because of all these things, people have been scammed a lot of money out of it, and you therefore need to be careful when it comes to cryptocurrencies. There's mainly two ways that you can make money out of cryptocurrencies. One is you trading the cryptocurrencies. You can trade where you buy low, sell high, or sell high and buy low. It's not like, I know even in shares, though when we talked about shares, we just talked about the Zambian environment where shares, you can only buy shares. You can't, you can only go long on shares, meaning you buy and hope that they will increase in value. In Zambia, you can't go short on shares, but in other countries, and using certain apps like Robinhood and whatnot, in those countries, you are able to go short on a share where you are selling those shares with the hope that their price will go down. So with cryptocurrencies, you can trade. You can either be long or you can be short, where you take it, cryptocurrencies are fake, they're going to fall down in value. Then you sell the cryptocurrencies. And as long as the price of the cryptocurrency keeps going down, then you'll be making money. Or you can go long. You can be a bull in the market. So you buy with the hope that they will increase. If the price keeps increasing, then you make money. That is what is called trading. Now, when you're trading in cryptocurrencies on these exchanges or using of brokers, they can give you what is called leverage. And with leverage trading, your positions are going to have a higher amount compared to the actual money that you have. So for example, you find that your one kwacha in the market can represent, say, 1,000 kwacha. So which means one tick or one point movement in that cryptocurrency price is going to move a lot more money compared to if you are trading without leverage. So leverage has got its advantages and disadvantages. You can make money faster, but you can also lose money faster. It's a double-edged sword. So that's one way that people can make money in cryptocurrencies, which is trading cryptocurrencies. And how do you trade? You can trade on exchanges such as Binance, or you can use Forex brokers such as Paperstone, Hot Forex, and whatnot. They all have cryptocurrencies as things that you can trade. Then the other strategy is buy and hold strategy. If you had invested just $100 in Bitcoin in 2009 when it started, right now you could be a millionaire. This is not saying that it's a get-rich-quick scheme or you make money faster, but it's an environment that is very volatile, and therefore it moves up very fast and it moves down very fast. There is a lot of people that speculate in this space. There are even schemes called pump and dump, where someone will talk about a coin to say this coin is doing big things, it's going to make a lot of money for you. As they say, it's going to the moon, and people will jump on The moment people start jumping onto that currency, people will start buying. The more people buy, the higher the price. And then once the price reaches very high, then those guys who had started the whole thing at the beginning, who entered when the price was low, then they start selling. The moment they start selling, then the thing would crash, and those who entered late end up making big losses. It then works like the way these Ponzi schemes work, where they are making you to have new people join, and then the money from the new people is what is used to pay the old guys. So there are those schemes that can also take place in some of these coins or some of these currencies. Therefore, you have to be mindful of it. But the strategy we're talking about here is buy and hold. While you are taking it, okay, the current price of Bitcoin, regardless of what it is, I believe in the next 10 years, it's going to be, say, 5 times or 10 times or 1,000 times the current price. And you think about it, you say, okay, they are ever going to be just 21 million and we're at 19 million. So the cap is likely to be fully utilized. Therefore, if I buy now and I hold, then in the future, when people need now to use Bitcoin for them to transact and whatnot, I'm going to make money. So you buy now and you hold, and you don't care about the fluctuations that are happening on a day-to-day basis. So that's another strategy where people buy, they just keep buying small portions, 500 kwacha here, 200 kwacha there, and they just hold it for the next 10 to 15 years, and they see what will happen after that. But with any investment, as we always say, you should never invest what you cannot afford to lose. What we mean is, if you were to lose this money, is it going to lead to your financial ruin? There is a lot of us that have gone through a situation where it's just been a big mess, and believe you me, you don't want to be in that situation. So what are the concluding tips when it comes to cryptocurrencies? I know I've just touched on the top basics, but it's just for you to get an understanding of what it is, how it is that you can leverage on it and use it as one of the investment vehicles. So the concluding tips is, you should always get an understanding of what are your objectives, both short term and long term. Are you in this for short term or long term? What are you looking for? Is it to make money off the spikes? Is it to make money off the fact that you think in the future cryptocurrencies will be more generally accepted and all those things? Secondly, you need to do a research on the wallets and the exchanges that you can use and keep for safety reasons, because your money is kept either on these exchanges, the wallets, or in your external hard drives and the like. So you do not want to have your keys in an external hard drive, then the external hard drive crashes and you've got no backups. Thirdly, you have to keep your keys secure. This is a true story. There's someone whose flash drive has got Bitcoin worth 32 million US dollars. They have forgotten their keys. They have done their 2 tries of recovering. They're remaining with 1 try. If they put in a wrong key or a wrong password, then that crypto is gone forever. So that's one thing you have to think of. And do not invest in anyone or in any company that comes to you and tell you invest in us without doing proper due diligence. You should be able to either learn how to trade in the cryptocurrencies yourself, or if you're going to invest in a company or another person that you think has got the knowledge in these things, then you have to check at least their performance, maybe 6 months, a year. Look at their track record. Are they actually doing what they say they are doing, or it's just all fake? And to be honest with you, if something is too good to be true, as they say, if it looks like a Ponzi, smells like a Ponzi, tastes like a Ponzi, then the probability it is a Ponzi scheme. So you have to be careful and keep yourself protected from such things. And with any other investments, you have to diversify your portfolio. Don't put all your eggs in one basket. If you are buying Bitcoin, you can also buy other altcoins, so that you try and create a mix, and not just everything again being in crypto. As we are talking about these 7 investment ideas, you can put some in crypto, some in your bonds, some in properties, some in cash and cash equivalents, so that your portfolio is diversified and therefore your risk is managed. And in this market, you have to be prepared for volatility. As I mentioned, there are some people that are in this just for pump and dump, and they'll pump up a stock. As we saw the GameStop stocks, they were pumped, and people made millions, but people lost a lot of money when the dumping started. So that is about it in terms of cryptocurrencies and whatnot. And if you have any questions or contributions, we can always talk in the comments. Thank you for your time and have a blessed day.